Hey everybody, Tyler and I are going to be talking about our second Buffett stock that we're looking at right now. It's Chubb, an insurance company. Ticker symbol is CB. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So, Tyler, I'm a fan of the insurance business. We know Buffett's a fan of the insurance business. Just looking at the list of Buffett's 60-ish subsidiaries, we see Geico, we see a reinsurance operation, we see a bunch of companies with the words, indemnity and, and things that give away that they're insurance businesses. So it was kind of very highly publicized earlier this year that Buffett had been accumulating a secret stock in his portfolio. In other words, he asked the SEC for permission to not reveal what he was buying. Um, he was buying enough that it would have been a really needle moving thing. And it was later revealed that that stock was Chubb, the insurance company. Ticker symbol is CB. Just to kind of give you a quick snapshot and quick overview of what they do before I kick it over to Tyler. Buffett owns, as of the latest information, about 27 million shares. That's roughly a 6.7% stake in the business. It's worth about $8 billion at the current market value. Chubb's about a $110 billion market cap company. They are a property casualty insurance company. They specialize in coverage for businesses. They are the largest commercial lines insurer in the United States and one of the biggest worldwide. They're a leader for large personal lines, like if a high net worth family needs liability coverage. They have a reinsurance business, which we know Buffett loves. They have a personal accident and supplemental health insurance business and a big life insurance operation in Asia. They operate totally in over 50 countries around the world, but more than half of their business is in the US. And it's just there's a lot that Buffett, like, we could see why Buffett bought this stock. So Tyler, run us through kind of why you think Buffett likes Chubb so much.
Yeah, I mean, insurance in general is a place that he likes to be for all of the reasons that we've discussed ad nauseum. Float and tends to be a profitable endeavor, especially when it comes to things like specialty property and casualty for business and things like that. It's not as much of a knife fight than, say, like personal automotive from like Geico, or for example, because it's not like shelf insurance you can buy off the internet or things like that. It tends to have to be like assessed in a specific way because of the way that every business is unique in some sense. What I think is the attractive part to Chubb in particular, and over the period that he bought it, was the fact that, number one, Chubb was selling for a relatively low price at a time when insurance premiums were actually kind of like a low return business through like much of 2023. And at the same time, relative to the industry, Chubb is one of the more profitable ones and selling at a decent price. So let me kind of cover a little bit of that. In 2023, according to Swiss Re, they do like some industry white papers. 2023, the average globally, the return on equity for most property and casualty insurers was about 6%, which not great, right? In 2014, it's expected to rise to about 10%. And then by 2025, it's expected to rise to 12%. So there's been a lot of like right sizing on pricing, some of the, a lot of the funkiness that we saw from COVID pandemic, some of the supply chain woes, force majeure, a lot of other kind of business disruptions that actually, had to be covered and paid out from insurance. Those things have kind of not completely fallen to the wayside, but certainly not as frequent as they were through 2021, 22, 23. And so with that, you're seeing a global uptick in profitability. And I'm sure that that's something he saw because obviously with Allegheny, which is an insurance company that's wholly owned, which does property and casualty, probably started to see some of that already. And so as a result, maybe it would be a good time to buy insurance in 2023, which is when he got started doing this. And over the time that he was acquiring his stake in Chubb, it was trading for about 11 times earnings. So pretty cheap for a stock price wise, for a business is expected to see an acceleration in returns over the next 2 years. And also, if you want to think about it in a competitive landscape, Chubb tends to be one of the better insurers in this industry relative to some of its peers. If you look at it on a combined ratio, its combined ratio is considerably lower than most of its peers, like Allstate, AIG, Travelers Insurance, some of the big European ones as well. So you get a slightly more profitable business trading at a good valuation with an expected uptick in earnings in the next 12 to 18 months that could probably stick around for a long time in a business that he knows pretty well. That kind of all adds up, right? We could go into it's a super secure business or whatever, but I think if we were to specifically look at why he bought now, I think that kind of covers at least a good reason why. I can't say exactly why, but I think that's pretty close.
Yeah, and just to add some numbers to what you just said about them being a little more profitable than their peers, um, over the past 10 years, Chubb's produced a combined ratio of just under 90%, 89.9%. That means, subtract that from 100, that means that Chubb's underwriting margin has historically been about 10%. Its peer groups have an underwriting margin over the past 10 years on average of 2.5%. Most insurers are happy to a little bit more than break even on underwriting and make most of their money off of investments. Insurance companies, their primary business model is to take in money. They invest it while it's sitting in reserves waiting to be paid out as for claims. So Chubb has a 10% margin before any of its investment income, which it has a $141 billion investment portfolio. It's got a high quality portfolio, mostly fixed income, but about 15% of the portfolio is not. So Buffett might like the investment strategy there as well. My question, and I'll answer this: do you think Buffett is looking to acquire an entire business, specifically Chubb, or an entire insurance company, or is this just kind of an addition to the stock portfolio?
I want to say, just in addition to the stock portfolio, I'm kind of the mind that if he was going to buy it, he would have just bought it outright at that time. And then, because it was trading at a pretty good valuation, yes, he would have had to pay a premium at that point. But I think this is just more of a buying a good cheap asset at the right time versus or a quality asset at a good price versus like being, trying to prime the pump for a full acquisition. That's my opinion, though.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.